and the JSE, including the rand remaining fragile after the flat close in the last session. The local markets closing in the red yesterday, led by losses in precious metal sector stocks. Phaswane Mphahlele is from the Makwe Fund Managers, a senior portfolio manager there. He joins us now for a quick markets analysis. Mr. Mphahlele, thank you very much for your time. Let's begin with your quick overview of how the local index has opened this morning.
Good morning, Colin. Looking into the markets today, we opened up flat, around about 0.08 in the red. Meanwhile, our counterparts such as Europe opened slightly inching up in the green, and this follows more of a better sentiment coming up from last night, where we saw US markets didn't close in the red, but rather mixed, and this was supported by the bond yields that were cooling down, that we're seeing coming down from the multi-highs, as the bond market continued to believe of interest rates remaining higher for longer, and this had supported the dollar. And we're just seeing equity markets coming into realization of this, and rather beginning to digest what is going on. We see the Asian stocks were mixed, and this had to do more with the oil price even going to a one-year high at $97 a barrel. And general equity markets will be in this cautionary move as they see these oil prices rising higher at the back of the tighter supply we're seeing.
Let's talk about the quarterly employment survey for the second quarter, which is expected to be out today. It comes as a backward-looking read, if you like, but still a key update on formal non-agricultural employment, including the earnings in that sector. What are your expectations from that data?
When we consider the data, especially when you consider the fact, let's look at the fact that quarter two, we had a positive, better than expected GDP number up 0.6, and this basically reflected a better business mood environment and better business activity growth, and due to the stabilizing demand conditions, which helped business firms basically boost their output, and also out at the time where they were facing a lot of load shedding challenges and inflation. We believe that with that kind of business environment, there had to be some increasing in staffing, especially when coming into the trade, manufacturing, and finance, and therefore our expectation would sit on a slight improvement on that data front, and that should help boost our market slightly.
All right, let's look at company news. Capitec recording headline earnings growth of 9% to 4.7 billion rand in its August 2023 interim results. Help us make sense of their performance.
Yeah, looking at Capitec, this is the dominant retail player in the retail market. They have over around 21 million clients. The bank managers, you said, the profits are currently earnings up by 9% to 4.7 billion rand. And this is during a period where there was a lot of uncertainty, but because of the higher interest rate environment, the business were able to benefit from this, as we see the higher interest rate, the interest income, with me, the chunk of the income from operations was higher. This income helped their margins from their loan books and the investment portfolios. Further supporting this growth in their profits was due to the transactional volumes and income. This is due to transactional volume rising by 18%. We saw active clients being up by 11%, and this is due to Capitec's ability to innovate its investments and its products. We see that they were one of the new incoming clients. They benefited from their FinRel plan. We see the FinRel plan income has generated very positive, substantially up, along with the insurance. And this, despite this positivity during a higher interest rate environment, it's a double-edged sword. So there is some negative, some downside, and in sense of Capitec numbers, we saw amongst their peers too, net interest impairment charges are rising significantly, and this is due to their client base having failure to pay some of their installments, and this has led to the credit loss ratio rising to around 5%. It's still better compared to what they've seen in the pandemic, and therefore during 2020, the period of 2023, they have been adjusting well their loan book, as we saw their loan advances were up just slightly 8%, showing how conservative they are in terms of their lending criteria. But overall, when you look at how their profits are up 9%, and the net asset value is up 13%, and they've managed to declare dividends of 15.30 per share. All looks good for Capitec in the moment.
All right, let's conclude the conversation with Barloworld publishing a voluntary trading update for the 11 months, which ended on the 31st of August 2023. What stood out for you from their numbers?
When I looked at those numbers early in the morning, what came up, overall, both the Southern Africa and the Eurasia regions demonstrated resilience, adaptability in the face of the challenges of economic global uncertainty, inflation, interest rates. They managed to bring up some solid numbers in trading activity and profitability. Let's just zoom into the Southern African region. Despite the inflation and rent volatility, the equipment sector saw growth, which contributed to their revenue up 34% and operating profit up 70%, while margins set at a high 8% there. While looking at the Barbarian venture, it also did well. And when you look at them, you jump into the Syria, especially when looking into Russia. When you consider the impact of the conflict between Russia and Ukraine, it actually on their business operations, it reduced some business lines and there was some chain disruptions. And despite these events, they still gave us better results than we highly expected. I mean, the revenues was just down slightly around 46%. We saw the Mongolian business continue to lift in terms of revenue up around 56%, and their margins were slightly better, around 19.2%. And that just shows us that they managed to remain resilient and adapt, and this helped them improve their margins. And they did some cost controls, and this helped to improve their EBITDA margin. So I think I'm happy with the results as it stands.
Phaswane Mphahlele, thank you very much for that market update, a senior portfolio manager at Makwe Fund Managers.